We all know that housing inventory is super low right now, and it's one of the, if not the single greatest factor that is pushing up housing prices right now. But why? Why is inventory so low right now? I get this question all the time because it feels sort of like the perfect storm right now. There's low interest rates and record low inventory combining to push up prices. And we all know why interest rates are low. That one's easy. It's the Fed's way of stimulating the economy. They started doing that back in March of 2020, and they're starting to taper that off right now. But the question as to why inventory is so low is a much more complicated question, and one which I am going to answer today as I give you 4 reasons why housing inventory remains so low in 2022, and we'll talk a little bit about what could happen next. Hey everyone, it's Dave Meyer, VP of Data and Analytics at BiggerPockets. Before we get into today's topic, please subscribe to the BiggerPockets YouTube channel, give this video a thumbs up, and follow me on Instagram at The Data Deli. With that, let's get into why inventory is so low right now. And in my mind, there are 4 reasons why it is so low in 2022, and those reasons are uncertainty, home ownership trends, construction lags, and high demand. Let's break down each one of these one by one. The first one is uncertainty, and this should come as no surprise to anyone if you've been living through the last few years. The pandemic and the economic fallout have led to all sorts of uncertainty, particularly in the economic world. Whether it's kids staying at home or people working remote, it's just created all of these question marks that no one really knows how to answer. And in times like this, it seems that many people just choose the comfort of staying put rather than wanting to move or start something new. And I know that is contrary to this narrative that people are moving, and they are, but they're moving in spite of low inventory, not because a lot of other people are moving and there's houses on the markets. People are moving even though there is low inventory, which is causing prices to go up. This tendency to not want to sell is probably going to continue, at least in the uncertainty realm, because now we have a war and a humanitarian crisis in Ukraine. We also have inflation and rising interest rates, and that's just going to lead to a lot more uncertainty. And there seems to just be a certain subsection of the population that does not want to make big, bold economic decisions in this type of climate. The second reason has a little more data behind it, and it's just home ownership trends. Actually, a new report from Redfin just came out, and it shows that a trend started way back at least in 2012, so well before the pandemic. Back then, people were staying in their homes about 10.1 years, but now it's about 13.1 years. And this may not sound like a lot, but people are staying in their houses 30% longer, which means there is less turnover and less houses are actually going to hit the market. And again, this is another dynamic that I think is not going to change due to the market climate and low interest rates. Just think about it for a second. If you are a homeowner and you are locked in, let's say, at a 3% or a 3.5% interest rate right now, why would you sell your home only to enter a hyper-competitive market with rising interest rates? So if you haven't sold yet, I think people are probably going to keep riding it out based on the very preferential debt structures they have on their mortgages. The third factor is high demand, and we're seeing demand rise from all across the market right now. The number one thing, something I talk a lot about on the show, is millennial demand. We know that millennials are the largest generation in the US now, and they are reaching peak family formation years. So all of these millennials are starting to start families, they're having children, and they want homes. And so demand from millennials is super strong right now and is likely to stay that way for the next 3 to 4 years. And that doesn't really change. This is just solid demographics. These are people who are starting families, they're going to want homes. The second piece of demand that's important to note is second home demand. So people buying like a vacation home, not necessarily a short-term rental, but people's second homes. Demand for second homes is up 90% over pre-pandemic. So you're seeing a lot of people who are now able to work remotely might be looking for a second home, and that is adding demand to the market. Definitely not one of the major players, but every little thing counts in a market like this. And the last is lagging construction. Again, this is something that I've talked about a lot on this show, but after the Great Recession, construction just really started lagging. If you look at the chart here, you can see that we used to be building way more than we did from the period of about 2007 to about 2019, 2020. We are getting back to the stage where we were back in the early 2000s. But from the data I've seen, and there is a lot of debate about this, but from the data that I've actually been able to see, it does seem like it will take at least a couple of years for us to get out of this deficit that we've been in from a lack of construction over the last decade or so. So that's it. Those are the 4 reasons why I think inventory is so low right now. We have uncertainty, homeowner tenure, demand, and construction. Before I go, I should say, if you're wondering about foreclosures, it's not a factor. I know some people go on YouTube and they say it is, but I recommend you listen to the recent BiggerPockets podcast I was on with an economist from foreclosure.com. And this just isn't playing a role, and it won't in the coming years. So to me, we need either demand to drop off or construction completions to accelerate for us to see a material difference in inventory numbers. My best guess is that with rising interest rates, we will see demand starting to taper off over the course of the year, probably slowly as rates increase, but it should increase inventory and cool off the housing market considerably by the end of the year. Of course, I don't really recommend trying to time the market, but that is my best guess as to what will happen. That's it for me. If you have any feedback for me, ideas for me, or questions, you can hit me up on Instagram at The Data Deli. If not, I'll see you here next week.